Hello, friends. Welcome to today's lecture. So, grab your pen and your pads and let's get started. So, order and execution. What is an order? An order is simply a transaction you give your broker or a trading platform to buy or sell a currency pair or any asset at a specific price or condition. So, an order is just an instruction given. In stock brokerage, they call it a mandate. So you give a sell or a buy mandate. So before all of the technological advancements, in trading stocks, you just send an email to your stockbroker and you title it a sell mandate, put the quote, the ticker of the stock that you want to sell and the unit of the stocks you want to sell, and just a sell mandates, for instance, say Dangote Cement, 200 units. So the broker understands that transaction. So that's what an order is, a mandate or an instruction. So think of it as you telling your broker, I want to buy this currency if the market reaches this price, or sell my position if the market reaches this price. So it's just an order or an instruction again. Order helps you control your trades, manage your risk, and automate your strategy so you don't have to constantly watch the chart. Types of traders. Every trader participates in the same market, but not everyone trades the same way. Some trade within minutes, others hold positions for weeks or months. Your trading style depends on your personality, your schedule, your capital, your risk tolerance. Knowing your knowing your trader type helps you create a strategy that fits your lifestyle, manage emotions better, and stay consistent instead of constantly switching your approach. So there are different ways that people approach the market. Remember, I said that there are anything less than 3 months, from 10 seconds to 3 months, is trading, but that's my opinion. But I believe that anything less than 3 months, you can always categorize it as a form of trading. Anything longer than 3 months becomes an investment in some regard. So there are people who trade 5 minutes, within 5 minutes they are in and they are out. There are people who trade 1 hour, there are people who trade within 3 days, there are people who trade inter-week. So if even if we're grouping it within 3 months, within a 3 month frame, there are different kinds of people. There are people who just, there are people who just want to go in and out as fast as possible. There are people who can wait for a week, who can hold a trade for a week. There are people who can hold it for a month, 2 months, 3 months. So those are the categories of traders. So there are four main types of traders. There are the scalpers, the day traders, the swing traders, and the position traders. So scalpers, they capture small, quick profits from tiny price movements. They don't want to do too much within an hour. They just want to go in, come out, sharp, sharp. That means quickly. They don't want to waste any time. So we have day traders. So day traders take advantage of intraday price movement. So day traders may come early in the morning, say 7 o'clock in the morning, in this case, London time, and take a trade during London 7 a.m. and hold it until it's like maybe 12 p.m., 1 p.m. That's what a day trader is. They can hold within the day, within a specific day, they will hold a trade and close it. So swing traders capture medium to medium term price swing. So a swing trader would generally be somebody who trades within one day to as long as maybe a week or 2 weeks at max, maybe 2, 3 weeks at max. So that's a swing trader. So position traders profit from major economic trends or long-term price. So in this regard, position traders would hold for couple weeks to couple months, sometimes longer than 3 months in this regard. So position, basically that's what the name implies. They take a position and they just hold it. So it's quick description again. Scalpers, the average holding time, seconds to minutes, their momentum, they focus on momentum, just quick in and out. Their risk per trade is usually high because they don't wait for too long. So they want to just bank as much as possible, as quickly as possible. Scalpers are usually very, very technical in their analysis because there's not much news you can wait for, to decide your scalping strategy. I'm sure some people have found a way to make news and fundamentals work. Remember, if we go back to the lecture on economic calendars, that's what news is, and that's what fundamentals is all about. The releases that come on the economic calendar are called fundamentals. So day traders, average holding time is minutes to hours. They focus on intraday moves within a 24-hour frame. They want to be in and out. Their risk per trade is medium to high. The analysis is mostly technical, but sometimes it could be fundamental. Sometimes you see some that add fundamentals to their analysis. So we have swing traders who hold for some days to a couple weeks. So they focus on price swings. Like swings are long, elongated movements in prices. So a week, 1 week, 2 weeks, couple days. That's what a swing trader focuses on. Their risk per trade is usually medium because now they tend to hold. If you take a little position, $50, you can hold $50 until it gets to like $500. That's what a swing trader does. You don't have to risk too much because you are anticipating a long move into the future. So their risk is usually medium, not so serious, not too extreme. And some for swing trading, you are now shifting into fundamental trading. You're now shifting into places where you want to understand what's happening in the world, what's this currency saying, what's the president saying, what's the economy like, what's the central bank saying. You now want to start understanding these basic things because you are holding for a long period of time and the fundamentals play a significant role. So position traders, they hold for weeks to couple months and they focus on long trends. Their risk is usually very low because again, little risk can make them exponential returns because they are holding for a very long time. Position traders certainly definitely need to understand fundamentals because it will not make sense holding for that long without understanding the overall scope of the economy of the currency. So we have scalpers, the 3 seconds to minutes. Their goal is to capture small, quick profits from tiny price movement. Their style is fast paced, requires high focus and quick reaction. Their tools, usually 1 minute to 5 minute charts. We have some trading the seconds chart now. Often use high leverage and tight stop losses because again, they are not holding for too long. Example, a scalper might enter and exit 20 trades in 1 hour, earning 2 to 5 pips in each move. And that at the end of the day can be a whole lot of profits within that 1 hour. So the personality fit for this is an energetic, decisive person that thrives on speed and constant action. So day traders, we have their time frame is usually within the same day. They don't take trades into the next day. Their goal is to take advantage of intraday price movements, and their style is to look for clear setups and exits before the market closes in and out. So if it doesn't move well within the day, they tend to close it. Their tools usually the 15 minutes to 1 hour charts, and then they can hold for 3, 4, 5, 6 hours within the same day. Example, a day trader might buy Euro USD in the morning and close it before bedtime. So personality type is somebody who is disciplined, analytical, and prefers intraday structure and routine. Might be somebody who doesn't want to have to think over what's happening overnight. You just want to take a trade and know the result today, and that's it. So swing traders, their time frame is usually a few days to a couple weeks. The swing trader's goal is to capture medium-term price swings or trends, and their style combines technical and fundamental analysis. Their tool is usually 4 hour to daily charts because again they are looking to trade within a day to a couple weeks. So if you're on the daily charts, couple weeks could be 3, 4, 5, 6 days. So they focus on 4 hour and daily charts. So example is a swing trader might buy pound USD after a strong reversal and hold for several days, which can end up bleeding into a couple weeks. So personality fit is a patient, balanced person that prefers fewer, higher quality trades. So essentially that in a week they may take 1 trade, 2 trades. In a month they may take 3 trades, 4 trades max. Sometimes 1 trade, in a month, in an entire month, 1 or 2 trades. That's what a swing trader is all about. The position trader is a long-term trader. They focus on weeks, months, or even years sometimes. Profit from major economic trends or long-term price movements. Like if you observe, the Japanese yen has been very, very weak. So you see most currency paired against Japanese yen. The Japanese pair against this currency just keep trending higher and higher and higher. So if you're a position trader and you understood the fundamentals behind why the Japanese yen was this weak, you just have to keep holding and holding. Another good example is gold. Gold since the beginning of this year has just been going higher and higher. First time we reached 4,000 ounce, 4,000 per ounce on gold, and it just kept going higher and higher and higher. Again, gold is a safe haven asset that people invest in when there is uncertainty. So the goal of a position trader is to profit from major economic trends or long-term price movements. The style is They focus more on fundamentals and macroeconomic factors. This does not mean they don't use technicals at all, because they do. Sometimes they use it to take their entry. They already know the direction of the market, but they just want a good entry, a place where just to time a better entry. So they may use technicals, but a position trader would naturally want to understand the larger scope of things. So the tools they use usually the daily to the weekly charts, sometimes even the monthly. An example, a position trader might buy USJPY based on interest rate trends and hold it for months. The personality style is somebody who is very strategic, who is calm under pressure, who is less concerned about short-term noise. Because imagine you buy something now, it goes higher, you are in $1,000 profit, it comes back to $200, then it goes to 800, then drops to 600, and goes to 1,005. Those are the kinds of swings that the position trader would experience. So you definitely need to be calm under pressure. You see your profit reduce. You like so. This is why you must also know your own personality style, not your trading personality style. Your kind of person. Am I fast paced? Am I? So that's why there is no one size fits all. Everybody has their own, everybody has what works for them. So your own personality, am I calm? Am I a gentle person? Do I panic under pressure? Do I like taking decisions quickly? So once you know the kind of person that you are, so it's very important that a man knows himself. Once you know the kind of person you are, you know your strengths and your weaknesses, you can decide on what style of trading to go for. So choosing the right type for you, ask yourself, how much time can I spend watching the markets daily? How patient am I? Do I prefer fast results or long-term plays? Am I calm under pressure, or do I enjoy rapid action? So no style is better. What matters is consistency and self-awareness. Self-awareness, 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 self-awareness. You must know yourself, understand yourself, and be true to yourself. It's very important. There's no single right way to trade, only the way that fits you. The goal is to find your rhythm and master your discipline. In fact, there's a book called Trading Wizards, and there's many series of it. And one thing that you can learn from this book is that there is no perfect way to trade. Different people with different ways, with different. In fact, we have people trading with the moon cycles. When it is full moon, they buy or sell. We have all myriads of things. So just find yourself and stick to it. So okay, this brings us to the end of this lecture. So this was quite an extended one. We covered what types of traders are. We also covered what orders and execution are. At this point, I know you'll be having questions, and yeah, that's so natural. First thing I would encourage you to do is, if you don't know, if you've never heard of these terms before, just Google it and read a couple more things, watch YouTube videos, and be rest assured that even if you don't understand, the moment we get on the charts and we start looking at the charts and we start, you know, you start playing around MT5, Trading View, whatever platform there is, it just starts jumping on your head. So you start having a sort of epiphany, like, oh, this is what was described. And yeah, just have some patience, take it easy, study, take notes, and yeah, and remain positive. So until the next lecture, I hope you find this one insightful, and I'll be looking forward to your questions. And I'll just take it for a landing here. So until the next lecture, I wish you peace and good luck.